This is a lesson about commodities. We learned that commodities are raw materials or primary goods used in the production of other goods and services, and they are the basic building blocks of the global economy. Just like Forex and stocks, commodities are also traded in global markets, and based on notional value, a rough estimate shows they can reach over $300 billion per day in trading volume. Commodities are grouped into different categories. We have industrial metals such as copper, aluminum, nickel, and zinc. We also have precious metals like gold, silver, and platinum. Then there is the energy sector, which includes crude oil such as Brent and WTI, and natural gas. Lastly, we have agricultural commodities like wheat, coffee, tea, sugar, cotton, cocoa, and soybeans. Now, in Kenya, these commodities are not widely traded online. The only commonly accessible option digitally is through an ETF that tracks gold prices. Most of the other commodities, especially agricultural products like coffee, beans, tea, and maize, are mainly traded physically. The rest are still not easily accessible digitally because our systems have not yet reached the level of countries like the UK and USA, where commodities are traded using futures contracts or ETFs that track prices in real time. A futures contract is an agreement where you decide today to buy or sell a commodity at a future date at a fixed price. The advantage is that you don't need to physically hold the commodity, whether it is oil, wheat, or any other product. These futures are traded on major exchanges like the Chicago Mercantile Exchange, New York Mercantile Exchange, and Intercontinental Exchange. On the other hand, ETFs, which stands for Exchange Traded Funds, are funds that track the price of commodities, and you can buy them just like normal stocks. Examples include SPDR Gold Shares for gold, United States Oil Fund for crude oil, United States Natural Gas Fund for natural gas, and iShares Silver Trust for silver. These are especially suitable for long-term investors who don't want to deal with leverage or futures contracts. Now, personally, I use an app called HISA app, which acts as a broker in this sector. It is similar to a stockbroker like AIBAXYS Africa, but it allows you to buy these ETFs directly from the US stock market. I will also do a full video review of it in this playlist. You can download the HISA app from the Play Store since it doesn't have a direct link. At this point, you can clearly see that in this investing model, every asset has its own way of investing, its own brokers, and its own platforms. However, in commodities, because ETFs are traded like stocks, some brokers combine these services since they are closely related. Also, many companies listed on stock exchanges are directly involved in processing or producing commodities, which connects these markets even further. In the next lesson, we will look at crypto in the investing model, so stay tuned, and don't forget to like and subscribe.